Excuse me. Yeah, good morning, guys. Just as I was saying yesterday that the RBA is falling well behind. If they don't move, they surprise the market and moved by 0.25, which obviously Australian media are up in arms about and saying, oh, it's going to ruin everything. Well, it might hurt some, absolutely, but I think it was the right decision. Because when you look at this, which is the banking, what am I trying to say? It's the lending situation. So financing margins between interbank loans from US, Europe, UK and Japanese banks, and this is where Australian banks get most of their financing from. So the conditions are tightening dramatically, making it harder for US banks to lend out, and that got real nasty overnight in the US stock market, where the banks got absolutely smashed. Despite JP Morgan bailing out FBC, there's a major run happening on the banks, and that also then fed through to interest rates, which this is the 2-year bond, got smashed. So the Fed are going to be in a really tight situation right now because they're looking to raise rates tomorrow morning to try and combat inflation. But the banking crisis could be doing it for them, to be honest, right? So if financial conditions are tightening and bank lending is drying up, that's going to slow growth down anyway, right? So and the banks can't lend when they don't have money, and everybody's pulling their money out of banks. The banking sector got absolutely smashed overnight. It could be doing it for them, but when you go and have a look at inflation, right? So this is inflation, and I've highlighted here the orange is where they want inflation, between the 2 and 3% band. This is a monthly chart, so you can see they're reasonably good at doing that. This was the GFC, and these red lines is where they went to zero interest rates, and then inflation took off, and they held them there for pretty much 2 years, held them to zero, and then they started to move in interest rates, and inflation has started to come down, but it's still a long way to go. And then that's the month on month, but the last print was March, and if we look at the 1-year inspected inflation rate, we can see that it's since March it's been ticking up. So inflation isn't going away, and that needs to be battled. So the Fed are going to be caught between rising inflation, slowing growth, which is the definition of stagflation, and so maybe the banking sector, which got absolutely toasted last night, might help on that. That's the dollar index. What am I looking for? US 500. Month. I don't want month. I want this one to be daily. That one's 1 hour. This one's 5 minutes. This one's 4 hour. We can see the big sell-off on as the banks got smoked, and that is the dollar wasn't a safe haven overnight. The safe haven was gold. As gold rallied back above 2,000 and well and truly held above it, as money fled the US, not only because of the banking sector getting smashed and people worried about their money in the US, you've also got the debt ceiling crisis looming on top of that. So US dollar got a bit of a touch up overnight, as did the US stocks. So fun and games. I did say that it was going to be a tricky week ahead with all the data, and that's not going to change. We've got the FOMC tomorrow morning. We'll see what the Fed does, and we'll also get a speech from Jerome Powell at 4:30 Sydney time. So they're expected to raise it doesn't get any better. We've then got ECB tomorrow night, and then non-farm payrolls on Friday night. So still a very tricky week ahead, and I've just advise caution and trade accordingly. It's a wild old ride at the moment with the US all over the place. Aussie dollar clearly rallied on the unexpected interest rate move, but couldn't get through 67 cents. In fact, it didn't even tag it. It went through 67, but has failed back into this pretty much this zone here of support and resistance. And I've often said that there's no reason to buy Aussie, and whilst it's rallying at the moment, that's more about the US dollar weakness than Aussie dollar strength. Just because they raised rates, they're still a long way behind the curve. So happy to continue to sell Aussie. Euro turned around again. That's more about US dollar, as we can see here. It's pretty much after the euro closed. Excuse me. After the European session closed is when things started to happen, both in stocks and in bonds and currencies. So this is more about the US dollar move, and same picture on the cable, and the yen also. It was more about the sell-off of the US dollar than any yen strength. So that's it. Fun and games. We'll be back tomorrow for FOMC.